Hi there. This is Ryan Lopez with RPL Investors, RPL Capital Ventures. I wanted to take a moment to, well, first of all, Happy New Year. It's a brand new year. And as you can see behind me, I'm getting my studio, my home office set up and just kind of redoing everything and getting ready for a brand new year to start off fresh and start off hitting the ground running. But I did want to take a moment out from that and kind of explain to you why I started RPL Capital Ventures. And it all had to do with this project that I found. It was a great project. It's now unfortunately passed, and I just was not ready to take it down funding wise. And by the time I was able to kind of get everything together that I needed to get this thing funded, the period passed. So I just don't want to let another opportunity like this pass us by, because it was a fantastic opportunity, and I just kind of wanted to share that with you guys. So let's take a look at the project here. It's this big property right here on the corner. And yeah, it is adjacent to another storage facility, but it's all outdoor storage, non-conditioned, non-climate controlled, exterior access, one story. This particular project here is would have been an amazing project for the area. It's on a major thoroughfare going through San Bernardino, Highland Avenue, and it's very visible from the 210 freeway in both directions. And right here, it's on the corner, so highly visible, highly desirable area. I did an initial analysis of the area. We're well under the national average for square foot per capita for storage. And there is a major need in this area for RV and boat storage as well. And that would have been an absolute one-two punch on this area. Great combination of assets here, where we could have done RV and boat storage, and also interior climate controlled storage, area, and quite a bit too, because as you'll see, these buildings are minimum two-story, and I say minimum because we might even be able to eke out. We might have been able to eke out another kind of third story if we had been able to do this interior space. So as you can see, it's this huge piece of land. There's two big buildings on it already. This was a bank owned. It was an REO. The building was being completed, built out, and I guess the developer just ran out of money or something. We don't really know, but it was a great opportunity because it was mostly finished. As you can see, they probably needed to do some exterior work, a little bit of interior work, but all of the whole perimeter is completely secured already. It's got a block wall, and excuse me, consummate professional. And we have utilities on site. We even have the fire sprinkler riser on site and connected to the building here. So it probably just needed to be a little bit of work on that that was done on that. I mean, that's a huge thing already. When you have things like fire sprinklers on site, that's a good $200,000 savings on construction here. A nice heavy duty automatic gate, wide opening. I mean, everything was there, ready to go, and basically, we could have easily taken this thing down. I'm guessing, to finish out the interior of this and build out the storage facilities, as well as building out the second story in here and doing all the infill work and putting a facade on this area here. We're probably looking at 1.2 to 1.5 million dollars to install all of that, and we would have had maybe a $500,000 contingency budget and operating costs. And then the other nice thing about this property is that we would have been able to cash flow this thing immediately. We could have easily blocked this whole area off here, brought in boat and RV storage, and it would have been already ready to go, making money right off the bat. The people who were representing the bank, the broker, they were saying that, when I talked to them about it, that the bank is looking really for, something like around 7.5 million. And when I ran the numbers, initially I said, well, probably the best I would be able to do is 4.55. And of course, they didn't call me back on that because that's just, unrealistic for them. And I understand that. But the reality is that a project this size with a fairly new, building on it, with everything redesigned and refurbished inside, brand new, we could have put out a Class A building on this Class A site and easily put this thing up for sale within the 3 to 5 year period that we would need to be able to purchase it, construct it, stabilize it, and then resell it or refinance and pay out our investors. So, I mean, this was one of those projects that was almost a slam dunk. And I'll kind of explain a little bit more about that. The valuation, let's see if we go to Crexy here. For this area, so this is fairly close to like Fontana and those areas, and there is a couple of properties that are up for sale. There's self-storage in this area, and so I just kind of wanted to go over those real quick. Self-storage, apply. Let's just get rid of San Bernardino. All right, so let's see. This is one right here. So they want $30 million for this, and it's a large complex Class A building. It's got a lot of storage, obviously 2-story. They have solar panels and some other higher end elements to it. Probably a interior store. They probably do U-Haul rentals, and they probably sell a lot of stuff for moving and whatnot. So, but it looks like Tennessee, its square footage is about 108,000 square feet. And so 108,000 square feet, NOI is 1.3 million, so 1,348. So I'm just kind of curious if we take 1.38, 1,348, approximately, figure about, I don't know, 10% operating, or 30% operating, let's say 35 because they have a store. Vacancy rate, let's just say 10% just to give it a good cushion. And they want 30 million for that thing. So yeah, looking about a 4.5 cap rate, which is absolutely insane. I mean, I don't, nobody's buying at that price right now. I mean, I get it's a primary market, it's a Class A building, it's a well-functioning site. I'm sure it's a well-functioning business. But 4.5-ish is really, really low. But I'd be willing to bet you if they went to like say 5.5, 1,348.0. I bet you if they brought it down to about 24 million, 24.5, they'd probably get some offers on that really fast. So now you're looking, you kind of have an idea of what a facility like that is worth. And yeah, let's see what else they say. Oh, here, cap rate. Didn't even see that. 4.35. So, we were fairly close. I said 4.45. It's 4.35 here. Probably because it's probably a little bit more expensive to run something like this than 35%, probably somewhere around 38% to 40% because of the staffing and other things that go along with this building. So anyway, we're really close. And so I'm looking at, like I said, if they brought this down to about 24,000, so keep that in mind, or 24 million. Keep that in mind. Their NOI is 1.348, and they have a 93% occupancy. So obviously, I was off. I said 10%, so it's more like 7%. Okay, fine. And it's been 141 days on the market. Okay, so it's still relatively new, and who knows what they'll eventually get for this. But I can't see anybody buying this thing for more than 5.5 something, or anything less than 5.5 cap. So so anyway, just wanted to give you some idea of what valuation to expect. So in this particular example over here on this building, we have it's very similar in size, honestly, and the amount of square footage that we can pull out of this that is actually more valuable because it would be climate controlled for the most part, and we have other amenities and stuff in there as well to make it worthwhile for anybody who's looking to rent storage space. So it would be in complete opposite of this, non-climate controlled drive up versus interior climate controlled building. So it's a completely different audience that you're looking for. So there'd be no real competition. And also not to mention the fact that we're still below the national average. And I believe this area is probably able to support about 8%. It was, 8 square foot per capita. This building, or this area right now, is somewhere around 5.2 square feet per capita, and 6 is about the national average. So as long as we're under the national average, it's a pretty safe bet. And because the area, I believe, can support 5%. 8%, 8 square feet per capita. I think we're in solid position because the within a 5-mile radius, there's hundreds of thousands of residents in here, and they just need a lot more storage in this area. We would, of course, before we closed on anything, we'd have a professional company do a full analysis of the area to make absolute sure that what we're planning is going to work out. But I think just based on a cursory study of this area, we're well under the needed amount of storage, and this is one of those projects that is. I'm extremely confident that this would have worked out better than we could have ever even imagined. We always do conservative numbers, but it's really nice to be able to jump in on a project when you know that your conservative numbers are going to be way lowballed, way undervalued, and it's going to actually perform way better than the numbers that you are working with to ensure that you have all your margins covered and that the project is going to be successful. So if I had gone and actually talked to the bank, I was told that this was owned by a relatively small community bank. I'm confident that if we had given them that $7.5 million that they were looking for this property, we would have been able to underwrite with them and pick up this property with them giving us the loan, probably at 20% LTV. And at that point, we would have been also able to negotiate potentially a lower interest rate, and I would have also negotiated at least a year of non-payment for the construction period of this project, or a 2-year period of interest only, something like that. So we would be cutting our expenses immediately off the bat, and we would also be making enough money by renting out those RV and boat storage pads that we would just put in here right away. And so again, slam dunk, we would have been able to hit our 6% preferred returns for our investors in the first quarter, and just get going on construction on this pretty much right away, because we'd be able to break it down into phases and different different project streams. So it wouldn't be this all-encompassing project. Very, very easy to manage at that point. So kind of going back to maybe we take a look at just one more valuation in the area, just to make absolutely sure. Let me back out here a little bit, see if there's anything else. There was a few other ones on here back a few months ago when I was really looking at this, and I guess they've fallen off. Either they were sold or they just took them off market for now. Let me see LoopNet real quick. LoopNet. See if there's anything there. No. Let's try first. Oops. Space. What do I want to do? Not for lease, for sale. Okay. Specialty. To do self-storage. Okay. Let's get rid of San Bernardino too. Oh. Okay. So let's see what we have here. Lake Havasu. Oops. All right. Just kind of look at this area here. What's this one? 10 million. All right, let's see what we got here. Oh, come on. Let's see here. There we go. Okay. Never. What's going on? Okay. So, what are we looking at here? So it's a 51,000 square foot specialty building offered at 10 million, 10.5 million, 5% cap rate. So that's actually getting closer to what I think people would be paying. Let's see, this is Lakeshore. Was this Elsinore? So we're probably looking at more like a secondary market in this area. So honestly, I would say probably 6.5 cap rate is probably where they're going to land at down in this area. So if we were to look at their numbers here, gross rental income 819,000. Let's just go back to the where am I? Oh, that's right. Okay, here we go. So if we're looking at 819,000 with operating expenses of 35, vacancy rate of 10, kind of my usual. And we're looking at like 5%. Let's see how close we get here. So, they're fudging the numbers a little bit. Maybe they're saying 30% here, probably something like that, or they're saying 35 and maybe like a 7 or 6%, something like that, maybe 5% or something there. So they're probably doing that, rounding up to give them a little bit of wiggle room to get to that 10.5 million. And valuation, but like I said, it's probably gonna be more like 6.5 with so I guess if they were to take and offer that in a secondary market at 6.5, they could probably get 7.7 ish, maybe $8 million for that, let's just say. Okay, so that's one way to look at it. So I just kind of want to give you an idea of size, range, how much square footage. This one had 51,000 square feet, I believe. Class C building. So it's Class C building. It's on 3.47 acres, which is a fairly big lot. It's comparable to the one we're looking at. The building size is 51,000 square feet. So they're not even saying what the square footage of actual rentable square footage is, unless they might say it in here somewhere. So I don't know, maybe they are considering the rentable square footage in here. So it's probably about 80% of the overall square footage. It's usually about a 80% efficiency in most designs. So, all right. So we're looking at, for about 51,000 square feet, about 10 million-ish, or sorry, about 8 million-ish. And then this one was how many square feet of storage? Square footage, so roughly double. And it's Class A in a primary market, so that's going to bump up the value. So we said something around 22.5 million at 5.5 cap, I believe. So anyway, so you got some basic idea of what the value is of these projects. Now let's go back to this one. We've got about a 3.5 acre property here. The square footage of these buildings is, well, it's hard to say. I guess I wish they had kept the listing up. So we got about 200 by let's just say 100. So that's 200 by 100. That's, let's see here. I'm not going to do math right now. 200 times 100. So that's 20,000. So that's 40,000 two story. Then we have 100 by 55. So 100 times 55 times 2 is another 17,000 square feet. So 54,000 square feet. And then this building here is, measure distance, is approximately 100 by 200. So that's another 20,000, another 40,000. So we're looking at about almost 100,000, just under 100,000 square feet of interior space at, so say 100,000 times 0.8. So you're looking at about 80,000 square feet of rentable space, average if we, take out the areas that we can't rent. So 80,000 just in those two buildings, plus all this square footage of RV storage. and your national or your average in this area, Class A, and don't forget it's climate controlled. So you're probably looking about, say 1.35. So if we're doing like 80,000 times 80,000 times 1.35 equals, and times 12 equals 12 months. So you're looking at about, so it's, just so you know, what I did was take the about approximate square footage of rentable square footage times $1.35 per square foot times 12, which is 12 months. So I'm getting a gross number approximate at 100% capacity, 100% filled. We're looking at about 1.296 million. So about, say, 1.3 million just in space here. And then you're probably looking at another, you could probably get at least 1, 2, 3, 4, 5, 6. I would say, so figure that these are, let's just count these, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you're looking at least 20 to 28 parking spaces here, and then probably another 20 in here or so for RV and boat storage at approximately 200 a piece. So let's just say 45 times 200. And again, that's a very low estimate for what we can get for RV and boat storage per month. So that's another 9,000 times 12. It's another 108,000. So we're looking at about, let's just say 1.4 million gross. And if we go back to our calc here, we're going to do 1,4,0,0,0 at still 35 with a 10% vacancy. And we're looking at a 5.5 because it's a primary market and very close to that other one in Fontana. We're looking at a valuation of approximately $14 million. So just want to, well, almost $15 million. So I just want to kind of point out to you that if we had bought this building for $7.5 million and we put $2 million into it to bring it up to, beautiful standards, Class A buildings, two Class A buildings that are that have 2 stories of climate controlled storage. We would be into it for $9.5 million, and at the end of that period, we'd be able to sell this for almost $15 million. So in a period of 3 to 5 years, to be able to pick this building up, renovate the entire property and the buildings themselves, get the business up and running, stabilized, and get it to the point where it's mostly automated, and we've got the expenses cut as much as possible, and this thing is making as much money as possible. We can turn around and sell it. Don't forget, 9.5 million investment, and we're selling it for about $15 million. That is a huge amount of a profit on the backside of this thing. And even at the worst case scenario, if we were having to sell this thing at like a 6.5 for whatever reason, we'd still be getting 12.6 million for this piece of property, with a 9.5 million input, and that is, like, to me, a slam dunk. And that is why it hurt so much that I was not able to pull this project together. And I swore that, after losing out on this one, I'm not gonna be in another position where we can't jump on the next project that comes along that's every bit as good as this project. And so that's the reason. That's the whole purpose of me doing this, doing all this work to set up this funding company, RPL Capital Ventures. And that's why I'm now actively looking for potential investors. Because, honestly, putting your investment money into real estate is one of the safest, best ways that you can make solid returns on your investment, because there's always intrinsic value in real estate. It's hard to, short of the world ending and somehow this building or this property getting leveled to the ground during the investment period, you know, there's no way that the value of the property is going to go down. It's going to always have some level of intrinsic value in it. So it's not like investing in stocks or bonds or anything like that, where, guarantees are flimsy, and in many cases there are no guarantees. It's either going to go up, it's going to go down. You're not sure how much, and you can potentially lose everything. In this particular instance with real estate, it's very difficult to lose everything, honestly. And this is not to be construed as investment advice. I'm just simply explaining to you my reasoning for investing in real estate personally, because it is one of the absolute safest investments, in my opinion, that you can possibly make. Of course, we always highly suggest that you talk to your accountants and your lawyers to make absolutely sure that everything is above board and safe on your end, because that's just the due diligence that we should all be doing as real estate investors. And so if this is something that you're really interested in, if this is an asset class that you're particularly interested in, I would love to have a conversation with you. Just fill out the form on the sheet, and I will set up a quick phone conversation. Usually takes between 8 minutes and half an hour. And I just kind of want to have a conversation with you to really see where you're at, what your experience is in real estate investing, and what you hope to gain out of it. I mean, that's really important, because we want to make sure that that we're working with people who are investing for all the right reasons, and that that you're comfortable and confident with the asset class, and that you're that you preferably even have experience investing in real estate prior to this. Keep in mind, we can only work with accredited investors. We do have an area on the website where you can, where you'll be able to determine whether or not you fall under that accredited investor, umbrella. And if you are an accredited investor and you want to get more information on any upcoming deals that we find, please just fill out the information, and let's set up a quick phone call, and let's have a conversation. Let's get to know each other. I appreciate it. Thank you so much for your time, and I look forward to speaking with you. Take care.